I'm here with Andy Eng, Head of HSBC Securities Services in China, and Sophia Chung, Head of Client Services at HSBC Securities Services in China. So Sophia, can you just start off by explaining what the QFII scheme is, the Qualified Foreign Institutional Investor Scheme?
Okay. The QFII refers to 5 types of asset managers. The first one is overseas asset manager. The second one is insurance company. And the third one is a securities firm. And the fourth one is commercial banks. And the fifth one is the long-term investor, including pension fund, charity funds, endowment fund, and also the other long-term investor, including central bank and other sovereign investment entities.
And how does that differ from the RQFII or the renminbi QFII?
Okay, RQFII scheme was introduced at the end of 2011, and this March, this scheme was further revised. So RQFII are the financial institutions with registered in Hong Kong and having their principal business in Hong Kong, as well as holding the Type 9 asset manager license issued by the Hong Kong SFC.
And to give an idea, how many QFII and RQFII licenses have been granted by the Chinese regulators, and what sums of money were you talking about? Just how much investment has there been under these two schemes?
For QFII, at the end of December 2012, the number approved by regulators stood at 207, while there's 135 approved at the end of 2011. So we have seen a very significant increase of the QFII number approved in the last year. The total number of RQFII approved by the end of March in 2013 was 27, with the total approved quota was RMB 70 billion. And in the scheme, there's still 200 billion RMB available for RQFIIs to apply. For the quota size, and in the QFII scheme, the total cap is currently $80 billion, and at the end of 2012, only 37.4 billion was allocated to the existing QFIIs.
Okay, so there's still quite a long way to go before that.
Yes, still half of the quota are still available for the QFIIs.
Okay. What types of securities are QFII investors eligible to put their money into? And also, what have the trends been so far? What are they actually putting most of their money into? Is it bonds or equities, or is it quite a mix?
For the both QFII and RQFII, their investment scope by the rules are the same. They are allowed to invest in exchange-traded instruments, including A-shares, bonds and warrants, and also the securities investment fund listed in exchange. And also they are allowed to now access to bonds listed in China interbank bond market. They are also allowed to access the IPO and other rights issue or rights offering in the market. For the asset allocation, in the QFII rules that the QFII has to at least invest at least 50% in equities. And for RQFII, now they don't have any restriction in terms of asset allocation.
Sophia, thanks very much for that. In the third chapter, we're going to be talking about the CIBM, the Chinese interbank bond market, and what opportunities there are for foreign investors in that.